Hey, what's up, guys? Just checking in with you today. I had a referral come across my desk from a fellow realtor who had helped a first-time investor purchase his first investment property in Rochester, New York. And he was calling to just get some information on management services and what to expect. And I actually typically recommend the first-time investor to just go ahead and self-manage. Usually they're calling me to see if they can a la carte the services so they can try to save some money. And, we just provide full service. So if you want management, you come to us. You don't have to do anything. You sit back and relax, collect your check, but we don't do any kind of a la carte offering. And I pretty much explained to him that in my opinion, he's best off to just go ahead and manage it himself, because that's going to give him a really good look under the hood as far as what goes into operating a rental property from a management perspective. That way, when he does build his portfolio up to maybe 10, 15, 20 units, and it's starting to actually drain his time a little bit more than he would wish it would, that's when he could come back to me and say, hey, Mark, I've got 15, 20 units now. I've got these good reserves that we've built into the pro forma. So now that I don't just have this one unit, paying that management fee isn't going to be quite as burdensome. And then he can give me the units then. So he was really refreshed that I was open and candid, and I gave him that advice. We talked for a while about different strategies and, trying to get him on the right track. So when he does do the underwriting of the tenant himself, he gets somebody in there that's going to be really beneficial for him. So we talked about maybe even looking for somebody that's a little bit on the older side as a tenant. They are on a fixed income, and typically they can't pay the full market value rent that's being advertised on these units. It's because Medicare, Medicaid has not kept up with the increase in housing costs. But I told him, if you have one bad tenant, that can completely destroy your ROI. And not to mention, every time you turn something over, that's going to cost you money. You're going to have vacancy. You're probably going to have some kind of issue that you got to deal with the house, that, the tenant moving in just once done, where the previous tenant didn't really care about it. Maybe there's a little hole in the screen or something silly, something trivial. You're just not going to get away with not being able to do zero expenses and move somebody in most cases. So he really took that feedback to heart. I think he's going to be on the right track. He's going to go out. He's going to attempt to place a tenant and then self-manage it, which I think is a really good thing for a new active investor to do, to really get to know what's going on. One question that he did ask is like, hey, what advantage do you have as a professional management company that I don't have when I'm going out looking for these tenants? It seems like if I'm going to screen them and everything like that, then I should be pretty much on even keel with you guys. I said, well, kind of, because we're managing 450 plus units and we do marketing every single day, we have a lot of inbound leads for tenants that we don't necessarily know where they're going to go, and nor do they. They just come to us and say, hey, I'm moving to Rochester. I need a rental. I see that you're in the rental business. Help me find a rental. So we've got those incoming leads, and we can then go ahead and try to service them with the properties that we have available. Where if you're a active investor with 1 to 3 properties or whatever, you're just looking for a tenant when you need a tenant, which might be once a year or once every couple years, if you're lucky. So those were some of the big takeaways that I had from that. We talked about a lot of other stuff. I probably should have recorded the call. That would have been smart, so we could have given you a little bit more value, but I think I did a pretty good job covering it. If you guys got anything that you want to hear from me, I've been doing this for 15 years. I live and breathe real estate. I like to help people get off on the right foot so they don't make a huge mistake and then end up getting a sour taste in their mouth about real estate and really not wanting to participate in it, because real estate is an awesome way to protect your money. It's a hedge against inflation, and it cash flows. So you can build a passive cash flow stream. Now, you're not going to get rich quick. You're going to get rich really, 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 really slow. But, I'm not in this to get rich quick. I like to provide quality housing for people that's safe and that they want to live in and that they enjoy. So that's part of my vision, part of my mission, and I like to work with other like-minded folks. So if you want any content specifically, feel free to drop some comments down below, and I'll make a video for you. All right, peace.